Let's now take a look at the very latest in the world of business, as the JSE is expected to follow recovering Asian markets this morning, which have been cheered by the easing of Chinese COVID-19 restrictions. All eyes will also be on the U.S. Federal Reserve expected later. Jimmy Moyaha, an independent analyst, joins us now to talk through the latest market developments. Jimmy, very good morning to you. Thank you for your time. Let's talk about how the markets opened in early trade and easing after the Naspers sell-off earlier in the week.
Good morning, Paul, and morning to the viewers. Absolutely, it was wonderful to see the markets opening in the green. We've got the JSE trading up about 2.5%. You've got Naspers and Prosus up. Almost all our stocks are in the green at the moment, and this recovery is definitely something that's needed at this point. We're still down for the week, and we're still down for the month, but it is a very positive start, particularly given that we're in the middle of the week, also in the middle of the month, and we've got some key data coming out of the U.S., as you mentioned earlier.
And at the same time, commodity prices seem to be easing at the back of those ceasefire talks between Russia and Ukraine. Tell us more about this.
Yes, I mean, we saw the oil price hit about $120 a barrel at one point, and that's largely because of Russia's position in being one of the top 3 oil producers in the world. They're part of the OPEC plus conglomerate of oil producers, and the strain that the tensions are causing, as well as the strain along the Russian sanctions, has resulted in difficulty in Russia being able to get their oil out there, being able to supply the world with, cause the oil price to go up quite significantly. Also seen on the back some uncertainty that the gold price reached almost $2,100 an ounce. It has since sitting at about $1,915, and on the commodity side, that's going to be largely driven by what's in focus today with the Fed. We have been anticipating this rate hike for the longest time since last year, and we're finally going to get today of policy direction from the Fed following a rate hike, how many rate hikes that sort of thing. And we've seen that the gold market has taken of a stall in anticipation of that. We've seen the oil price also come back down to the $100 a barrel mark. You know, mining stocks really perform in line with that. See them hold on a bit.
I think we're going to have to leave it there for now, Jimmy. We're struggling to hear you there. The connection not so good. We do apologize for that. Jimmy Moyaha, an independent analyst, talking about the latest market developments. Hopefully we'll be able to get hold of him to answer some of the other questions and, of course, give you a clearer response to the question that we spoke to just a short while ago. Let's now turn to this. Founder and CEO of BW Advertising, Bongani Goss, says the lack of will to transform the advertising industry has led to the ongoing acts of racism and discrimination in the sector, as the South African Human Rights Commission hears from industry players, experts and companies on what measures can be implemented to prevent this.
Remember a few years ago, the NEC Charter came out, Marketing, Advertising and Communications Charter. It came out specifically to try and address the issues that are being raised now. It was also amended, I think, a couple of years ago. It talks to different issues relating to BEE, gender empowerment, and also shareholding of different companies. So the regulations are there. The problem that we are seeing is more like the lack of will to transform from the industry. It's not that regulations are not there, they are there. Because what typically happens now is that in terms of regulations, the whole BEE thing is turned into like a box-ticking exercise. So black agencies are usually brought in just to tick boxes. But you will notice that the bulk, a large chunk of the marketing budget keeps going to white-owned multinational agencies.
Right, we take you back now to independent analyst Jimmy Moyaha, who's talking about the latest market developments. Jimmy, before we got cut off, we were talking about commodity prices seemingly easing at the back of those ceasefire talks between Russia and Ukraine. Can you tell us a little more about this?
Yeah, sure. So, I mean, as I mentioned, the gold price did reach $2,100 an ounce. It has since fallen back. And we have seen that the result of that has been in anticipation of the Fed meeting that is going to be taking place later today. We have seen the oil price as well come back down below that $120 a barrel mark, and we have since seen that that has resulted in some of our oil stocks, Exxaro and Sasol, taking a bit of a slower, tapered performance at the moment. I think at the moment, the uncertainty around the tensions and the sanctions and what's coming up from the Fed is going to be a big driver for gold and oil going forward. And those results we're going to be seeing probably coming out later tonight or early tomorrow in Asia session tomorrow.
And Lipstar Holdings published its full-year results and cash dividend for the period under review. Talk us through the group's service offering and their overall performance.
Yeah, so Lipstar deals with some of your common brands, your Laughing Cow, your Denny, your Lancewood cheese, your Lurpak butters, and they basically came out and put out a good set of results. Revenues were up about 7%. Normalized earnings before interest and tax was up about 2.4%. They did announce that their COVID expenses that they put in place to protect their employees, they managed to reduce that by about 15 million rand down to about 15 million. So that was very good from their perspective. They also announced that their return on capital employed improved only slightly to about 12.5% from about 12.3% in the comparative period last year. Some of the other interesting announcements that came out of Lipstar, they're considering an offer of about 175 million rand for two of their business units. And this offer is set to be, I mean, it's closer to about 200 million, but it's about 175 for about 70% stake in these two businesses. And alongside that, there's call and put options for the remaining percent that will expire in 2023 and 2024. So they are looking to streamline their business. They have announced they're looking to better position their business from an inventory perspective as well. They also announced that their final dividends that they declared was about 25 cents per share, and that they had a normalized headline earnings per share that was improved by about 18%.
And Growthpoint also posted its interim results and cash dividend. The property market suffered rather severely at the hands of COVID-19. Are we seeing some recovery on that front?
Not just yet. So Growthpoint reported quite poor set of results. Revenues were down 4.8%, operating profits down about 4.3%. They announced also that their headline earnings per share was down. They did announce, however, that their net asset value per share did improve, and that increased slightly. And they're also paying an interim dividend of about 61 cents per share. They're paying that out of their cash reserves that they've got, or income reserves that they've got on hand. It's meant that their dividends per share has increased in terms of payments by 5.1%, and their earnings per share has improved to around 107 cents for this year, compared to a loss of about 42 cents per share for last period. So their current operational performance is not exactly pre-COVID and not exactly a recovery just yet. They definitely did feel the brunt of emptier offices, particularly in their commercial rental spaces, and where they're heavily concentrated within the Johannesburg and Sandton regions. But I think they were still able to pay out dividends to their shareholders, and still able to say that going forward, they're hoping that this recovery continues, and they're hoping that they see fuller offices.
Thank you so much, Jimmy. Let's leave it there. Jimmy Moyaha, independent analyst, talking through the latest market developments.